So it's Wednesday, so it's time to build some crypto systems. And I do have some updates and some progress that I think will be super interesting to share with you guys. Now, we got a system working that was okay, right? I won't say it's its final form, but we got most of the way there. And really, I started to get kind of stumped on ways to make it better without, falling into curve fitting and doing all that crazy stuff. So what we do to generally try to make systems better is we then try to add these systems together to just amplify the systems that we're looking to take. The more systems that you can generally trade together, again, assuming they're uncorrelated, which is what we'll look at in a second, the better. Now, what we're going to do is we're going to pop into it. I'm going to show you what I'm talking about right here. So first of all, if we take a look right here, nope, sorry, I'm just there. So this is the system that we built. Again, not done. Still some things I want to look for and, how to avoid these bigger drawdowns. I want to start looking at different columns for that kind of thing. But mostly good, right? Something that I would start to potentially play with and paper trade with and start to maybe trade really, really small in order to get like a good feel, for lack of a better term, of what's going to happen here with these systems, right? So once we get there, then it's okay, how much do I torture this data until it looks really, really good versus start to look at other things. So I created a different system that I want to show you guys. And this different system is meant to be very complementary because, again, it's important that we are looking at, let's just grab a random one. We're looking at complementary systems is a good way to talk about it, right? So the last system we talked about was mean reversion. So we were looking for strong cryptocurrencies that were dipping pretty quickly. We were looking to buy into those. This one's a little bit different where we are looking for trend continuation. And for this, again, we're still using RSI, but let me try to find one that's, was here for a while. The idea is we're looking to buy stocks that are strong and we are trying to hold them for as long as we can. The other system, we are saying, okay, we're mean reverting. We're buying stocks that are a little weak. So let's put a time limit on that. And let's just try to buy them and hold them for, we end up with like 2 weeks was probably optimal. We're going to buy and we're going to hold them for roughly 2 weeks and we're going to sell them. In this system, we're trying to do the opposite. We're trying to say, okay, give me a currency that is very strong and let me hold it until there's some signal that, weakness might be starting, or at the very least, strength may be ending. So we may not trend up forever. Maybe we don't reverse, but maybe the trend is slow. There's something else that we could potentially put our money into. So if we take a look at that particular setup and just the returns of that, it looks like this. And again, far from done. I'm going to go through the whole process with you one more time to show this particular system and how I would refine that, generally trending up over time. Generally speaking, that's the line is going up. There's a lot of flat periods, which makes sense. If cryptocurrency as a whole is flat, we're looking for kind of the opposite, where we're looking for stocks to get really overbought really, really quickly. And we're trying to ride that momentum. And if the momentum doesn't work, we're trying to get out quickly as well. And if we look at the stats, this one is the new one, and 47% year over year looks phenomenal with a 17% max drawdown and 800 trades, which we need to take a look and we need to actually verify these things and do robustness testing and all of that. But the lesson, we don't need that for the lesson that I want to give you guys today. Also, right, 34% of the time. So you've got to get used to that with crypto. It seems like you have to get used to being wrong very frequently, but because of the massive trending nature, you can make a lot of money when you are correct. So we have that, and then we also have this one, and this one is, again, the one we built last time. So if we take these two and we look at them back to back here, we notice this one's flat, let's say, for all of 2022. And we look at this one, it's also flat for 2022. That's not ideal, but a huge push up in 2023. This one was flat for most of 2023. So now we're starting to get interesting. And you could go and eyeball these two strategies like this. But one of the things I like about Real Test, and one of the things that I do with all of my systems, that you can see over at StatsEdge, is the ability to combine many systems is super important. So what we want to do is we want to combine many systems in a way that they are stacking. Now, again, with the second system being far from done, and even the first system not quite being done, this isn't perfect. But what I wanted to show was a couple things right off the bat. If we combine these two systems, so again, the first system had a 70 or 46% year over year growth with an 18% max drawdown. The second system had a 74% year-over-year growth with a 56% max drawdown. That's a big one, right? We've got to work with those guys. And then if you combine the two, you get a 147 year-over-year growth, which I laugh because I don't believe that. Plus a 63% max drawdown. So it's important to note that you're not combining these two drawdowns to make this one. There is some amount of anti or negative correlation that's happening here. So if we take a look, we can actually look at this individual report. So this is the report that is brought up, and these are the two systems, right? The MSR week or MR weekly, which is our mean reversion, and then our RSI momentum here as well. And combining these two things, you can see the stats that I just read out there with the 73 and the 45, and then combining those two. But what we're trying to do is when we go and we look, we're trying to look right here. This is where I'm going to spend a lot of my time when I'm actually building systems and looking at systems like this. I want uncorrelated returns, which we're seeing a little bit of. And the way to read this is that 1 is a perfect correlation. And of course, -1 would be a perfect kind of inverse correlation. So when system 1 makes money, system 2 loses money, and vice versa. That's would be kind of a more perfect, I guess, world. Now, what concerns me about this and what I need to look at, and where myself as a systems trader spends most of my time, are these numbers right here. So a 0.4 correlation is pretty high. So it means that this momentum strategy is working pretty well with the mean reversion strategy. And that's not what I want to see. I want to see this number being much, much lower, maybe in the 0.2s or below. And that would show me that these drawdowns, which is what we're looking at now, is that these drawdowns are uncorrelated. Is that when system A is going through a drawdown, there's a very low likelihood that system B is also going through a drawdown. And if I can kind of shore these two up by coming up with a second system that complements the first system very well with uncorrelated drawdowns, well, now we're talking, right? Now we are way more interested in that particular two setups because that would smooth out a lot of these periods. So if we take a look at the chart, you can see again, both of them didn't make any money during this period of time. And although this one pulled back and this one held up, it wasn't enough to kind of offset this big decline that we had here. And we're not trying to make a perfect equity curve, but we want to look hard at these numbers. So my goal now is not to come up with a second amazing system that I can trade and push out. If I come up with a second amazing system, I'm certainly not going to complain about that. But my goal is to now start to test different systems that I think are going to be uncorrelated in nature. And this is why I'm trying trend following. Because if we have a mean reversion strategy, something that buys on the way down and then sells on the way up, that generally speaking will be very well complemented with something that does the exact opposite. It buys on the way up and then it sells on the way down. It's finding those things that are separated. And you may have already guessed kind of the idea behind this. In both of these situations, I'm using RSI. I'm using RSI to say, buy this one when it's oversold and sell that one when it's overbought. So I'm wondering if my flaw here is by using the same indicator on both setups in order to make these trading setups work together. And I love this series because I find like there's just little lessons here for anyone who is interested in becoming a systems trader like me. If you don't want to go to StatsEdgeTrading and use our systems, but you're still interested in becoming a systems trader, I think there's some good lessons to be had here. But also, if you're trading yourself, if you're coming up with different systems and all of those systems are mean reverting in nature, then what are you doing, right? We're just showing that you're just amplifying the upside and you're going to amplify the downside. So spend your time. If you have something that's working for you, you have some opening range breakout strategy, if you're a day trader, whatever it is, think of what your system does, whether it's trend following or mean reversion, or just think of very calmly what your system does, and then try to think of something that could exploit the exact opposite of that. If you are looking for opening range breakouts on gappers and you're looking for things to continue your way, that's great. Well, what if those fail? Is there another system that you could build there for potential failure setups? And those could do very well. And then by combining these uncorrelated systems together, hopefully over time, you will increase and you will generate smoother returns, which is all our goal, right? We all want good returns. We all want smooth returns so that we can sleep better at night, especially in the cryptocurrency 24/7, 365 times. So just so you know, that's what I'm doing next in this series, and that's what I'm doing next for Stats Edge Pro members is I'm on a hunt for some sort of system that's uncorrelated in nature. Now, I'm getting a lot of comments from this. I'm getting some emails that I have to get back to. So if you're seeing this and I haven't got back to your email, I'm sorry. I'm gonna look to do that fairly soon. And if you have any ideas of systems that you think would be uncorrelated to my mean reversion system, let me know and we'll start to test those and we'll try those with you. But always trying to show that there is this myth, I think, in systematic trading that you build a system, the system makes you money in the long run. You go to the beach. What my time is spent doing is not watching stocks tick up and down and not worried about the next tweet or government shutdown or whatever is happening du jour. I'm always just looking for the next system. Once they're built, I just place the trade that the robot tells me to place. And then after that, I'm just working on new systems all the time. The more systems I can get in different assets, uncorrelated, the better I get to sleep at night.